This is Tucker here with Black Box Digital Asset Management. Coming to you on another Monday to talk some TA and talk markets and get a sense of where we are and recap some prior price action and try to figure out where we're headed into the end of the year and into Q1. So I'll jump right into it. We'll go look at total. We'll look at all the things we usually look at. I will preface, not a whole lot has changed on my outlook, but we have had some interesting price action in equities. They've been a little more volatile than crypto has actually recently, and we have seen that correlation between crypto and equities start to pick up more in the last few weeks, as it was diverging pretty substantially in October, November. But we'll hop right into it and see what we got here. So looking here, we've got total on the monthly now. Not a whole lot has changed. We're still seeing that lower low on, this is total one, by the way. Obviously we're gonna take a look at all three total charts on the monthlies. Let's go back to the monthlies. But yeah, we'll start here with just regular good old total. Let's see. So we had a few things drawn last time. A couple of these moving averages. There we go. Yeah. So I do still think this bull market support band is relevant, honestly. If we got there tomorrow, it'd be a 13% rally. I don't really think that's out of the question for crypto or for Bitcoin. So I think we definitely could come and retest this. That band is pretty tight. I will say that now. That band is pretty tight. So we could even see a little deviation above if we do go up and test it. But I would have, over a month to 2 month time period, if we do go test this, I would expect it to smack us back down. Still waiting, right? Still waiting on this weekly order block. Probably the equilibrium of that right in the middle there would probably be about 530. That's probably a decent spot to look. But nothing too drastic has changed here. Still looking for lower, levels to the upside. Obviously that 920 billion and up to 945. This will come down. The longer it takes us to get up there and test it, this will continue to come down. So again, what we don't really want to see is for the band to come to price rather than price go to the band. We want to see a price push up into that band and then get smacked down, rather than the band come down here and then just price kind of the floor give out, which is kind of what happened up here when we were at, like, that corresponds with about a 20K Bitcoin right there. So that is total 2, excluding Bitcoin. Pretty similar. Looks a little bit stronger, honestly, because ETH has held up much better than Bitcoin has over the past 6 months, I'd say, which we can see in the ETH Bitcoin valuation. But yeah, they're not equal lows, but they're pretty, honestly they might be actually. Let's see here. Yeah, that's basically, I'm going to call it equal lows. Like, let's see here. Okay, yeah, not quite equal. A few billion off, which is significant, but I would expect those to get taken at some point regardless. Kind of the same setup. I would say probably this monthly open, monthly close and monthly open right here is a good place to target for total 2. Right at 360 billion. I'm not going to spend a whole lot of time on these total charts because not a whole lot has changed. Total 3 looks even more so like total 1, right? Like if we do something like this, right? Total 1 and total 3 look pretty similar. So obviously the determining factor here is ETH. So let's go look at that on it. Well, we'll go to Bitcoin first, but Bitcoin, what do we got? The 2-day. Let's go back to the weekly non-log. Yeah, so you know, still looking for our levels. Still looking for something like, you know, I'm not convinced that's the top of this rally, right? I really think we could go a little bit higher. We did kind of front run this wick, which is something similar to what we did here, right? We front ran that wick just by a little bit. It's also what we did. Is this the 25K? No, yeah, it's also what we did here, right? So when we see a break of value, you want to see a retest of that range low, right? This was front ran. This was front ran. You could say that this was also front ran. So could it be the top? Yeah, it definitely could. I would look for a reclaim here, right? I mean, I would look for something like that. That wasn't drawn very well, but if we can get and hold above 17.6, you know, that's the the level everybody's talking about right now. That would be more bullish in my opinion if we could come and see if we could take out some of these stops in here. Those are probably long stops actually. Maybe short stops from right about here, or this candle open, something like that. Look at like 18.5. As you can see by the text over here, there is a daily FVG. Let's see. Yeah, that's the one I'm looking at right here. Sorry, I know that's a little messy. Basically, we bounced right off this daily. You know, obviously the target would be the next daily, but we haven't really gotten that big move up. We've basically been consolidating here since, like, you know, November 30th. We'll have to see. I'm not convinced one way or the other. That wick doesn't look great. I am decently short biased on a macro time frame. Also this week, I think there are probably some shorts to be taken back down to like maybe the bottom of this FVG down at like 16.5. By the way, for anyone who doesn't know, FVG is fair value gap. It's basically an imbalance in the chart. So yeah, I'd be looking for down here, or maybe even that 16.2. That 16.2 level is very important. So, you know, we could maybe come down and then move up. If we don't bounce here, I'd be looking for like that, something like that. You know, we'll have to wait and see, but nothing, you know, obviously since I streamed last week, nothing too crazy has happened for Bitcoin on the higher term time frames. This is the 6 hour. We'll pull out our boxes and our range. A lot of these ranges, you know, this is the EQ of that box, line up with these boxes. So I'm just going to take the range off here, make it a little cleaner. Yeah, so that makes sense. We had bearish divergence on Market Cipher. We got the drop. We're looking for this area to hold, this red area. It's where a lot of price action has taken place. Let's go get the VPVR of the range. Let's say here. Yeah, right there. Okay. Let's get rid of these boxes. Let's make this nice. Okay. So, I mean, trade this like a 5-minute chart, right? We got deviation back inside the range. Target here, right? You nothing too crazy. These three were obviously deviations at this point. This is basically our little local range. Let's lock that. If we take a look at Market Cipher, let me bring this to the front actually. Move to front, okay. A little divergence indicator, it's pretty nice. The money flow, right? Money flow is probably one of the most powerful indicators on here. We're seeing this action with the money flow, right? There we go. Yeah, we're seeing money flow come back to the upside. It's now green. This is the 6 hour, so it's a higher term time frame. That is what you want to see. We do have our RSIs, sorry about that, pointed down. VWAP minus 17, that's not too horribly low. If you see a minus 20 or above, or below, I guess, on this VWAP to the downside, expect lower in the short term. But if I'm treating this like a very low time frame range, I'm looking at least for a move back to 16.5 and then kind of see what it does there. If it can hold above 16.5, I'd target the top of the range again. But this is just range trading 101, right? Like, you short up here, you long down here, you play the middle as a TP1. So, if we do this and then that and that, and you short that, back down, TP1, TP2, right? Like just basic range trading stuff. I would like to see this range get broken at some point. Like, this range back here was not the most fun, right? I mean, we were in this for a very long time. I would kind of hate if we chopped sideways for the next like 3 months. Which I honestly don't think we're gonna do, and that's partially based on what equities are doing right now. But I think I'll put it this way: if we do get a move up, I think we get back inside this range. I wonder if I still have that on. Yes, I do. All right. If we do get a move up, I'd look for that imbalance I was talking about, which actually lines up. What is that? 18.575, 18.6. Yeah, I'd be looking for this VAL of this former range right here. If we can get that, I'd look for 19. Honestly, I would be looking for lower if we got up there. I'd be looking to scale into a short most likely. Obviously, personally, and none of this is financial advice, and none of this has anything to do with what we do with our company, so I'll just throw that out there. But just my insights and what I'm looking at. So up here, I would definitely look to look for lower. On the downside, right? On the this money flow does look very nice actually. Anybody who long back here is in some pretty nice profits. I would probably take profits if I had long down here somewhere, but on the downside, let's see what that looks like. I can't remember where I drew this box from, but I do like this range, this like 14.8 to 13.8 range for a pit stop, right? Like eventually I think we get down to this deep value zone. This area down here, this 12.5 down to like 10. But nothing goes in a straight line, right? We're not gonna get there in a straight shot. We'll probably, we could even come up, grab some liquidity, come down, consolidate, new low, retest into here. Like that could, this could really take to like March, April, May, June, right? This could take a while, but I guess on the topic of going into 2023, just play the low time frames, I guess, right? Like play the range we're in. Nothing crazy has changed on the macro since last time I got on here. I guess we did have Powell get on last Wednesday and have some pretty dovish rhetoric come out of his mouth, but not exactly sure what all that was about. I guess we'll go look at equities. I think that that Powell had probably seen the non-farm payroll reports, knew they were going to come in hot, knew that people were going to take good news as bad news, and prop the market up a little bit before that happened, setting us up to get a 50 bip hike next week. His tone during the FOMC meeting and the upcoming meeting will be very telling as to how he thinks 2023 is going to go and whether or not a recession will be declared. I would be of the opinion that we're already in a recession, even though the labor market does not say so yet. But I think earnings season is going to be a disaster. I think tech is going to continue laying off. Growth will slow, and we should see lower asset prices, which at the end of the day is not the worst thing in the world, right? We'll probably get some pretty good buying opportunities, but if you just put this in context with prior bear markets, right? 27% to the bottom, 08, 57%, 2000, 50%. So, I just am yet to be convinced that the bottom is in for equities, and of the same token, I'm yet to be convinced that the bottom is in for crypto. I think there's too many macroeconomic headwinds, and I think that while these, counter trend rallies are nice, and they feel nice to, see some green during a red year, I don't think they're really worth playing, and I think they're worth adding downside protection, right? Downside exposure at the tops of these rallies if you can. But my macro take aside, let's just turn all this on. Yeah, so we've got our trend line, which is being respected yet again. I honestly thought we'd get a bigger deviation above, and we still could, right? We could bounce and go up here and come back down. But as it stands right now, it looks like our trend line is intact, and if the trend continues, we see lower lows, and that's where I'm looking for, like 33.75 all the way down to 32.30, somewhere in there. But on our way down, right? Big fib, little fib inside. This whole area, we should see some chop, probably, unless we just nuke right through it. But I don't necessarily see that happening in the short term. If we do come down into this range, I would probably look to TP any downside protection anybody had, just a little bit at least, and maybe look to add if we, did something like this, retest the trend line. That's where you add down to new lows. Obviously we could still, maybe come grab these equal lows and then something like that, which could take a while, right? Like this could easily extend out into Q2. I don't think we're just going to go straight down. But this area up here, this 4,200 to 4,150, that's where I think, that's where I think the hammer gets dropped. At the very least, right? Like all this TA aside, like basic chart pattern, right? We have a rising wedge right here. right? Like super basic. And this is your target down here. So, you know, I would expect that to break to the downside. Obviously, we haven't broken yet. If we did break just on this pattern alone, you know, if we broke, I would want to retest. It would not look like that. Break, come back, retest. It wouldn't look like that either. Whatever. You know what I'm saying. It's just not the most bullish looking thing, right? A rising wedge on the bottom leg of a bear market, you know, you don't really love to see it. I did draw this little PO3. This is kind of a market maker model, not the market maker sell model, but this is just kind of a pattern you see across all asset classes that plays out a lot. This is what they do. They bring it up, they distribute, they deviate to the upside, get everybody bullish up here, and then expand, right? This is the expansion phase. And this happens to the downside too, right? Like you could call this distribution, and you could call this deviation, and you could call this expansion, right? Like just that model happens all the time. So, you know, if that continues to play out, I'm also looking for the bottom side of the wedge at the very least, and then new lows, which lines up with the fib, I believe. Yeah, new lows at that fib. So that is the SPX. Short term, right? Powell could come out next week and you know, say we're hiking 25 bips and we're done, and we probably would get a pretty massive move, honestly. We probably would go get that box up at like 4,200. But at the end of the day, a Fed pivot is not bullish, and I will show you why in a minute. So let me see here. Yeah, we'll do it here. Okay. That's what we need to do. There it is. All right. Yeah, SPX 10 and 2 yield curve spread, right? Let's make this Heikkens. Yeah. All right. So when the Fed pivots, well, we'll leave that actually out of it for now. When the yield curve begins to normalize, begins to uninvert, right? This is during a recession, right? The yield curve inverts, signals a recession, okay? Same thing here. We see max drawdown. We're at a really not great point right now for the bulls because this thing has not even bottomed yet on the weekly, and we've still seen pretty substantial drawdown. So what we expect is for this to come back up here, normalize, and for this to continue down. This is really not a good chart if you're looking for positive price action. So, you know, this has been accurate for many years, and you know, I don't expect this time to be any different, right? If you are super bullish, you're saying this time is different, and those are famous last words. So I will leave that at that. Let's go back. Let's just make this DIA. Yep. All right, here we go. DIA weekly, Dow Jones Industrial. This is the ETF. As we can see, we've come up into this fib. I would expect a little down, at least test this trend line, see if the breakout is real. If we come down here and we get a hard bounce, that would be bullish. I won't lie, that would be bullish. This is a very important point. We need to see what we do here. If we can get back up, that is very bullish, right? All that's very bullish. Now, if we come down, test that, do something like that, not bullish. And if we just nuke through here, not bullish. So we'll need to see. This thing does look pretty overextended, but looking back at prior bear markets, right, 08, like this was really not that far off its highs, right? 7% off the highs right before complete and utter disaster. Right now, 6% off the highs, right? I'm not saying we're gonna just get like complete and utter disaster immediately, but it is pretty ominous, right? That we're right about here. And how long did this take to play out? From the top to the bottom, 308 days to the bottom. So almost a year. Shorter dated puts wouldn't do it. And my lights just went off. There we go. I wonder what it looked like in 2000. Okay, in 2000 it's kind of a mess, but even still, like right here, right? Like we were 8% off the highs before it just completely collapsed. So during a bear market, industrials can show pretty relative strength, which they are doing right now. Macro thesis and bias is down, but for now, I'm not going to tell you it's bearish if it's not. We really do need to see, if you're a bull, you want to see this thing, get a push higher and bounce, right? That's what you want to see. You don't want to see this fib level lost. Right now, it is holding, okay? It is holding right here, which is a good sign for the bulls. You really do not want to see this level lost and retested as resistance. You don't want to see this do that. This would be an important point right here. See if it bounces, comes back up. But yeah, you don't want to lose that fib. That's for sure. All right, let's move on. Dixie. Let's go to the monthly. Okay, something interesting I was looking at the other day, and somebody that I give a lot of credence to and who I watch and listen to and read their stuff gave me an idea, and I was looking at this, and let me make that better actually. Let's just make this like that. Let's just make this. Sorry about that. Okay. So, back here, right? What was this? 1980s. We blasted up. We came down to about 103, and then we ripped, right? We went up to 114, back to 103, ripped. Blasted off, 114, came back. We're not quite there yet, right? We could still see lower. If we came back to that 103 and then rip, right? I'm not saying we're gonna go see 160, but it wouldn't be a great sign if the dollar bounced hard right here and then made a new high like that. You don't want to see that. anything that is a pair against the dollar, which is everything, would get crushed in that scenario. So that's something I'm watching. Something else is, let's see, let's go here. Weekly. Yeah, so we're in this fib. You know, absolute lowest I could see the dollar going is back down here to retest all this. I don't think that's going to happen. I think if we're going to bounce, we're going to bounce now. I don't think we're just going to retrace the entirety of this year. I could see one more red candle down to 103 and then bounce, but we'll see what happens. This is clearly a break of structure, obviously, and this is what fueled the SPX rally along with shorts closing, I'm sure. But, you know, yeah, we'll have to wait and see. I mean, these equal highs I actually could see taken right there. Yeah, I could see 103 on the dot. So, you know, I think we could see lower, but also I think a bounce is going to occur. I think 103 is our downside target, and I think we can easily target 114 to the upside, and then probably 120. Let me see. Yeah, anything up here I would look at. So I'd look at like 118 up to 120, and then like 125. But, you know, this is not an uptrend you necessarily want to fade. I don't think this is the end of it. I don't think it's just going to go up and down. Like, I think we at least get a decent bounce back up to year high at 114 here. Does that happen before this month is over? Probably not. Probably takes a little bit longer, but in general, not a trend you want to fade for sure. Last one of these macroeconomic indicators is the VIX. You know, just basically naked eye looking at this, right? Like, that is an area where the VIX bounces consistently. So, you know, we are seeing a green hiking on the daily. So, yeah. Let's see. We're getting any others. Yeah, daily hiking is green. So we are looking for a reversal here. We are in that zone, right? That sell zone for equities. So, I mean, I would at least look for this upside to be capped at 34. Not capped, I don't want to say capped, but that's where I would look for the VIX to go first. You know, if we are about to enter the last leg down, any macro bottom has been at least 46. So, you know, if we get like above this green box, I would be looking for a bottom in equities and crypto. So, you know, if we bounce here and do something like that is where I'd be going long heavy right there. But yeah, I mean, like, if you got, right, things are just kind of lining up. Like, you know, you got the VIX down here, you got this all the way up here, you got, let's see, get rid of all that. You know, you've got your trend lines, you got the SPX up here bouncing off the trend. You got the dollar coming into support. Like, this is lining up for a dump, right? Like, this is not a bullish scenario that I'm outlining right now. Like, Powell could change that, right? Powell could give us a deviation to the upside. He could give us some dovish rhetoric and, you know, all that. But I think at the end of the day, these charts are leading the news, as they always do. And I think we come down Q1, Q2, and then we'll see where we're at. And I know this is usually a crypto channel, but, you know, I would be remiss if I didn't, you know, look at other macroeconomic indicators. So, along with the yield curve spread. So, just wanted to point all that out for everybody. Take a look at ETH real quick. You know, still got that higher low. You know, this thing really wants to hold. I'm not sure that it will, honestly. I wonder if I have a range. I'll just draw one real quick. Like maybe here. Yeah, perfect. I mean, it's wild how these things line up. Let's see, where is it? There we go. All right. So yeah, we're under the value area low. We've gotten rejected many times here, right? Like all of these tests gotten rejected, heading back down. Not the most bullish chart, even though we did see that pump over the last month. You know, we kind of retested the low of this range. It's looking a little toppy. It's looking a little triple toppy right here. I would look down at like 1150, even down to those perfectly equal lows at 1070. That would be, that's a pretty juicy spot. I would look to TP and maybe long actually. But on a more macro level, yeah, here we go. So yeah, we came into all this resistance. We didn't even get up to this GP up here. You know, this whole area, I would look for the pit stop, some chop, some consolidation, and then down to this deep value down here. All right, from like 750 down to 488. Anywhere in there, I'm a buyer. 100%, I'm a buyer. Up here, not so much. Not so much at all. We do have a pretty big volume spike, actually, right here, 1216. So I would look for that to hold. If we can't hold 1200, basically, yeah, 1200. I'm definitely looking down to that 1070 area. This whole range down here looks real juicy, honestly. You know, could we see more upside and go tap that, what is that, point of control? Yeah, go tap that point of control. We could. I don't think this would hold as support if we did, right? Like if we just turned around and came up here and deviated and came back down, like that's your short trigger. I don't think we'd like bounce here, right? Like I don't think that would happen. I think we would just go straight through it. Something like that. Just with the environment we're in, right? Like that's the first thing you got to do when you're trading is identify your environment and identify the trend. You know, obviously the trend is not bullish. There we go. Identify the trend. This is the trend, right? Like, you know, could you argue this is accumulation and basing? Maybe, but I wouldn't want to fight that trend. I wouldn't want to like long this right here, you know. So yeah, that's ETH on a more macro level. Still looking for lower as we are across the board with all these alts. You know, Matic obviously has shown relative strength. Link has really just refused to move. Just been in this range since literally May. Uni a little relative strength and has pulled back recently, but still ranging. Cosmos strength ranging. Some more alts. Dot showing a lot of weakness. Aave did show strength, but now it's looking a little weak. What is this? Oh geez, Klima. No, we're not gonna look at Klima. What do we want to look at? Let's see. Yeah, Litecoin. This is everybody's favorite right now. You know, if you long this, props to you for biting the bullet and taking that long, but I'm not sure how much more upside we're gonna get from here. I mean, could it go another $10 higher? Yeah, but you know, I'd be looking lower if I was anybody. this is the accumulation range though, right? Like this is the range to accumulate. So I would, I'd prefer to accumulate towards the bottom end of that range near like $50, but it is what it is, right? Like if you want to accumulate at $80, good for you. But if you hold it long enough, it'll probably end up going in your favor. So it's not the worst place to buy, but I would probably look towards the bottom of that range. I'm sorry that box is red, but this is kind of your accumulation range, right? Like these are deviations. Sorry, I need to make this bigger. Right? This is your accumulation range. These are your massive deviations. This is why you accumulate down here, is for the spikes. So I would say we probably come back down to the bottom. I mean, you could probably get this thing for $30-$40, but yeah, that's Litecoin. Mana, little metaverse play, looks pretty terrible, honestly. Could get a move back to 60, but not super bullish on alts right now while being bearish on Bitcoin, right? I mean, there's just not a whole lot of point to that. I mean, that could even be your retest, right? Like, let's look at this. Regular candles. Yeah, I mean, you could even call that your retest, maybe. Actually, no, I don't think so. I think we're going to come back up maybe 17.1 and back down to 16.5. I mean, it's just, there's not a whole lot going on here, right? Like, there's not a whole lot for me to talk about, but yeah, we'll have to see. I don't think anything wild is going to happen before the end of the year. We are getting a vol squeeze, right? Like, that's what the VIX is volatility. So we are getting a vol squeeze here, but I don't know that necessarily plays out before the end of the year. I mean, obviously we'll have volatility when Powell talks, but yeah, we'll see what happens then. But yeah, look, I appreciate you guys tuning in. I'm sorry, there's really not a whole lot more for me to talk about. Not a ton has changed on like a macro time frame. But we'll be paying attention to Powell next week, and maybe we even do an emergency live stream for when he's talking. But it's not wealth creation time right now. It's wealth preservation time, and we're being careful. I'm being careful. I advise everyone to be careful. Not advise, and should not use that language. I strongly encourage everyone to be careful. And I think we'll have some, we'll finally get some green next year, some green monthly hike-ins, some green weeklies. I think we'll finally start to get some actual, volatility in the sense of more sustained rallies. So, that'll be something to look forward to in 2023. We should get some clarity on these macro, headwinds that we're facing right now. So that's all coming up next year. So stay tuned, and we'll have a podcast out. I believe next Friday for you guys. So stay tuned for that. And that's all I've got. So I will see you guys next time.